Welcome back. We're off about 115 points from the top of the trading session. So as we speak, we are down close to about 20 points. But after opening closer to that 18,300 mark, the markets have been slipping. Swati Kulkarni, the Executive Vice President and Fund Manager at UTI Mutual Fund, now joins in to talk about the market fundamentals. Swati, morning, and thanks so much for joining in. This is Rima here. We're still very comfortably positioned above that 18,000 mark for our own markets. We've been talking about this great outperformance vis-a-vis the global markets. You know, the last time we were at 18,000, which is close to about a year ago, the texture of the market was very different. The leadership was different. It was all about the IT, while banks had taken a back seat. Now, when we're at 18,000, IT stocks are right at the bottom of the pyramid. Names like Wipro, Tech Mahindra are still down 40-50% from its all-time high levels, while banks have been soaring. So as you look ahead into the next 1 or 2 years, where do you think the leadership for the market is going to come from? Because the leadership mantle keeps changing.
Yeah, thanks, Rima. Actually, this has been the nature of the stock market. So, rather than looking at what could happen, which leaders would emerge, I would say at this point of time, we think that automobiles, banks, and telecom are likely to lead the earnings growth. And therefore, I think these are some of the sectors which are likely to outperform. As you said, IT, yes, has been an underperformer for last 1 year, or actually more than that, 2 years. But valuations theirs are also getting attractive, and therefore, I wouldn't write off that sector as yet. In fact, that if the concerns that are emerging about the global slowdown and the IT budgets getting postponed, probably is incrementally getting reflected in the valuations. So we would be watchful about that space as well.
So Swati, good morning. When you say banks, right, what do you do with PSU banks? Because clearly the earnings trend has improved for PSU banks. Loan growth has been strong, asset quality has improved. But this is a space that has not given great returns to long-term investors. Are things going to be different this time around?
Yeah, Sonia, what I feel about generally the banks, particularly, we are entering into a liquidity tightening situation, and therefore deposits are something which is likely to, you would see deposit rates likely to go up. As credit growth improves, banks will have to look at deposit growth, and that will lead, deposit rates going up. And the NIM expansion, net interest margin expansion that we have seen in the reported quarter, I think that would be temporary, and where, you have seen the repo-linked or loans getting repriced, but the deposit side, the liability repricing is yet to happen. So from that perspective, I think sustaining these kind of performances may be a thing which we need to be watched out. We need to be vigilant about. And as you said, yes, there are cases where the below price to book multiples that some of the PSU banks were quoting, they have now inched up to closer to a book. So therefore, I think our preference will remain into the private sector banks, which are rich in terms of the current account and savings account deposits, because that will give them the advantage of low cost of funds, as well as the capital adequacy where that is strong. So that focus continues, and we have an overweight position on the private sector banks.
All right, overweight on the private sector banks. Swati, you were also mentioning the auto space as one that you like. Can you tell us what way you would approach this? Do you look at the passenger vehicles? Do you look at, say, the two-wheelers, or would you play the EV theme? How do you sort of approach this space?
Yeah, Pavitra, the thing about automobile sector is here, we think that we are likely to see volume growth, and that is likely to lead to operating leverage benefits. Our bets are on the the personal vehicles, basically the PV side, as well as we are looking at spaces where there is the penetration levels are low, like higher CC bikes, for example. And the thought process here is, apart from the operating leverage benefits, is that the volumes have not yet reached the levels of 2018. and therefore the margins have substantially eroded in the sector. We could see the margins inching back as the supply side issues get addressed and the raw material prices come down, as well as the volume growth can pick up. So these are some of the things that we think that the long-term drivers for automobile as a sector, as our aspiring population, the working age group, which is going to support for many years, is something which is auguring well for the sector. Yeah, you said EV risk is definitely there, but at this point of time, that is more on the two-wheeler, where mass two-wheelers, we are underweight.
Swati, would you take money off any particular sector to invest in the sectors that you like? Have you? Yeah, go ahead.
I think more than taking off the money from sectors, I would say that it is up to the stance that we have taken about being underweight on metals and energy being global cyclical. That would continue, and we would be more patient about our investment in some of the consumer discretionary names, because we think that they have still not seen the uptick that is expected. And as we think normalization of inflation and as the general economic improvement happens, here there is a solid argument about the low penetration levels, premiumization opportunities, as well as the distribution expansion that would be a catalyst, long-term catalyst for these sectors. So I would say, rather than taking out money from somewhere, it is going with the conviction that we have at this point of time.
You know, one space that has come back into action in a big way is this whole agrochemical space, right? I mean, referring to some of these big names like PI Industries, which are clearly which is the stock of the day. I mean, it's up almost 12%. Do you see merit in putting more money to work here, Swati, in this space?
Can you repeat the question? I had a loss of connection for some time.
Sure. I'm talking about the agrochemical space, right, where we've seen significant traction, especially in some of these larger names like PI Industries. Do you see more merit here?
It will be difficult to comment on stock specific, but that is one area where, we will have to be, as generally the awareness is going up about utilization of, even in terms of fertilizers, as well as having right kind of...
Oops, I think there's an issue with your video. So we're going to just wrap it up on that note. Thanks a lot, Swati, for joining in. By the way, look at PI Industries zooming away right now. Sonal was telling us earlier in the day that it's been a very strong performance, over a 30% growth that PI Industries has seen in its top line. Margins have improved. It's ticked all the right boxes. Let's slip into a short break. When we return, we'll have B.R. Preetham of Sansera Engineering to discuss the company's second quarter earnings and the road ahead. Stay tuned.